the groups, not groups, but non-controlling interest without knowing the net assets of the subsidiary. So then you need an account that we call net assets of the subsidiary. We need an account that we call net assets of the subsidiary. Net assets of the subsidiary. So we have here net assets of the subsidiary. So you need this working for you to be able to get group retained earnings, and then number two, non-controlling interest. So this net asset of the subsidiary this time round, we shall be able to measure this net assets of the subsidiary at acquisition, and at reporting. At acquisition and at reporting. So at date of acquisition and at date of financial statements, basically. At date of acquisition and at the date of financial statements, at the date of the financial statements here. So this is a great working called net assets of the subsidiary. Now remember, when we talk of net assets, ladies and gentlemen, we are looking at the equity components. Equity components. So equity components, are you able to remember them? Are you able to remember these equity components? Are you able to remember these equity components? Equity components, for example, we have the share capital. We have the share capital. This question doesn't have share premium. So we have in this case here, ladies and gentlemen, retained earnings. We have in this case here fair value. Before fair value adjustment, I would rather we do UPS, unrealized profits. And remember, we normally bring unrealized profits in this working. We normally bring unrealized profits onto the net assets when it is bottom up. Allow me to use the word bottom up. From today, we shall be using it. We shall be using bottom up. What we call in this case, in this language of politics, better. Bottom up economic transformation agenda. So UPS, we only bring UPS here whenever it is a bottom up sale. So bottom up sale means what? Bottom up sale means what? Ladies and gentlemen, if you just give me 1 minute here, I explain. Bottom up means like this. You see, we have got two companies here. We have the parent company. We have the parent company vis-a-vis, in this case here, the subsidiary. Parent company vis-a-vis the subsidiary. Parent company vis-a-vis the subsidiary. So if the parent company sells to the subsidiary, that is top, of course, you can see top down. That is top down. If the parent, no, parent company is the heavy company, is the big company here. So if the parent sells to the subsidiary, in this case here, that is top down. But if it happens that the subsidiary is the one, in this case, that sells to the parent, the subsidiary in this case here sells to the parent. So in this case here, we are creating the wealth within the subsidiary because subsidiary is the one that will earn profits. So if the subsidiary is the one earning profits, ladies and gentlemen, here, so in this case here, the sale is bottom up, then automatically we shall bring that UPS here. If it is a top down, we don't bring that UPS here. We bring this UPS here bottom up because the subsidiary has earned some fake profit. So you should never allow that fake profit to be within its equity. We should be able to remove that particular profit like that. After that, ladies and gentlemen, we have what we call fair value. We have what we call fair value adjustment. And whenever we have fair value adjustment, it will be very important for us to have, in this case here, fair value adjustment, the depreciation bit of it. Of course, in this question, we were told that the asset that got a fair value uplift was land which is what here non-depreciable. But just for the format sake of it, we'll need in this case here to do what here to have these things. So then, ladies and gentlemen, could you kindly be nice to me? Are you able to see the share capital? Remember here we are valuing the subsidiary. Are you able to see the share capital of the subsidiary? Are you able to see the share capital of the subsidiary? Now you have this book, the share capital of the subsidiary. So share capital of the subsidiary, we are here. Equity, please don't pick the one of the parent. Share capital of the subsidiary, equity, shares for the subsidiary called Sophistic, it's 4,000. So this 4,000, remember share capital does not fluctuate. Share capital does not fluctuate. Share capital does not fluctuate. So share capital never fluctuates. So 4,000. Retained earnings, of course, this is the tricky one. Fortunately for us, we had computed retained earnings at acquisition. Do you remember that figure? Retained earnings at acquisition. Do you remember that figure? Retained earnings at acquisition. Do you remember that figure? Do you remember that figure? Thank you very much. I can see so many comments here. I can see so many comments here. I hope there is no question there. Oh, it's about good morning and sorry for sleeping late, and others are laughing at me. Please don't laugh at me. Don't laugh at me. I'm very serious. Even after I finish this for the first time, I'll have to go back to bed. I think my body needs that rest. Fortunately, I'm on leave today. So in this case here, retained earnings at acquisition is 5,000. Retained earnings, hapana. Retained earnings at acquisition is 5,000. And then retained earnings at reporting at the financial statements date. Retained earnings at the financial statements date. Oh, you're laughing with me. We shall overcome. We shall overcome. I shall overcome. I shall overcome. So retained earnings at the reporting date, don't work with the parent here. At the reporting date, retained earnings say 6,000 what year for? 500 is 6,500. Retained earnings at the reporting date is 6,500. 6,500. Now, ladies and gentlemen, we had this bottom-up economic agenda. Bottom-up economic agenda. So ikiwa ni bottom-up economic agenda, sasa hii unalambwa, lazima subtract your profit because hii umelambwa. So in this case here, we sold to the other. Let's check who sold to the other. Tuone kama ni bottom-up, ama in this case here, ni problems. Tuone hapa. We are told here, look at this. Sales from sophistic to pedantic. Remember, sophistic is the subsidiary. Sophistic is the subsidiary, and it is the one that has now sold to pedantic. It is the one that has sold to pedantic. So this is what we call bottom-up. The economic model, the Kenya's economic model. So in this case, kama ni bottom-up, hii sasa ni kulambwa. Mzuri aliniambia kwa tofauti ya kulambwa na kurambwa. Mimi sikuwa najuanga ni tofauti. Nilikuwa na vile nakosea. Kumbe sikukosea. Hata unasema kulamba, hiyo ni mzuri because kulamba ni ulimi ya binadamu. For example, akikulamba namna hii unasikia soft. Lakini kurambwa ni kama ile ndovu. Hiyo ndovu kuna ulimi very tough. So ndovu ikikuja ikulambe hapa, hiyo ni kuramba, itakutoa paka ngozi. So ladies and gentlemen, kama ni bottom up, hiyo lazima umerambwa sasa. So lazima subtract that UPS. So fortunately, we had computed this UPS. Is there somebody who can be remembering this UPS which had computed? This UPS, we had computed it. The UPS, we had computed it. Are you able to remember that? Are you able to remember that? 800, isn't it? 800, 800, 800, 800. 800, yes. So it was in this case here up whatever 800. So this of course will be subtracted from here. It can't be subtracted at the beginning. It wasn't. The sale accrued over the time. The sale accrued over the time here. So come and give me the fair value adjustment. Do we have any revaluations in this question? Do we have any revaluations in this question? Do we have any revaluations in this question? Any revaluations? It wasn't land. I'm confusing this question. This is a very nice question. In this case here, we have a Roman 1 at the date of acquisition. The fair values of sophistic assets were equal to their carrying amounts, with the exception of an item of plant, which had a fair value of 2,000. Remember, we are cutting 3 zeros, 2,000. So in this case here, the evaluation here, which is an uplift, of course, you can see it is 2,000, and the fair value adjustment never changes, just like what year, just like our share capital. So the fair value adjustment is 2,000 here. It is 2,000 there. And then, ladies and gentlemen, we have fair value adjustment, the depreciation bit of it. It depreciated over time. So can somebody in this case give me this? Was it 200? Was it 200? The depreciation bit of it, we are done. Depreciation bit of it, we are done. Depreciation bit of it. Was it 200? Somebody is telling me that it is top, bottom. It is top, bottom. Okay, let's repeat this. Depreciation was how much? First of all, give me the depreciation. 200. Ngoja kwanza. Kwani nyinyi mnaelewa aje kitu ya top, bottom na bottom up? Na bottom up woye. Unaona hapo ukiwa na parent, nirudie tena. Woye parent subsidiary. Parent subsidiary. Remember parent, this is Aura here. and this is Aura Junior, or my son. So in this case here, when it is bottom up, who is selling to the other? When it's bottom up, who is selling to the other? When it's bottom up. Because I want us to use this language of bottom up. Bottom up. Any reversed roles. Bottom up means reversed roles. When my son, I don't expect my son to do this big kind of business and then he starts selling things to me. When my son sells to me, it's not known as what here? Bottom up. That's abnormal. It's abnormal. So in this case here, we have to do what here? To subtract the UPS. But if it is the father that sold to the son, then this one here is normal. It is top down. From top down. That is normal. We don't subtract here. So in this question, ladies and gentlemen, remember the son is sophistic. The son is sophistic. Who sold in this case here to the other? Let's try to understand this. Who sold to the other? 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 So in this question, ladies and gentlemen, here, let's see so that we can understand this once and for all. It's good this gentleman brought up this argument. We are told here, sales from sophistic to who? To pedantic. Remember, pedantic is the parent. Sophistic S is the subsidiary. So I can see it is the son here who sold to the parent. So this is bottom up. It's abnormal. And if it's abnormal, tukasema ni kurambwa sasa hii. Lazima subtract. UPS, whenever it is bottom up, we must always do what here? Subtract it from the equity at reporting, from equity at reporting, from equity at reporting, from equity at reporting. Is that a little bit clear? Is it clear? Is it clear? Is it clear now? Is it clear now? Remember, it's bottom up. It's abnormal to have, in this case, here the son selling to the father, especially when they are very, very, very great. So then that is it. So come and give me the totals here. Give me the totals. Give me the totals. Totals. Ule kuna usingizi kama mimi asiandike. Ule kuna usingizi kama mimi asikuje pala kaandika. Asikuje pala kaandika. Depreciation, we had done that yesterday, please. So because of time, I would expect you, Faith, to watch the video if you don't mind. Where is retained 5,000 coming from? We are done this yesterday. We are done this yesterday. I'm so sorry, Alfred. That video is there now. I've made arrangements for the videos here to be put on time. I hope this one here, the yesterday one, is now uploaded. Is uploaded. Otherwise, I'll really spend a lot of time on this question. Quite unfortunate. So in this case here, the totals, we have 11,500. How about at reporting? At reporting. No. Get remember, we don't bring the percentages here at all. If you're using this approach, you don't use the percentage at all here, at all. Percentages normally will come when you are sharing profits. Here now we are looking at the whole subsidiary. The whole subsidiary. So then what do we have here at reporting here? DOA is 11,000. I'm told DOA is 11,000. DOA is 11,000. How about DOF? DOF is 11,500. 11,500. Thank you so much. So in this case here, go ahead and subtract the two. Go ahead and subtract the two. So go ahead and subtract the two. Go ahead and subtract the two. And then whatever you shall get is what we call post-acquisition profit. Is what we call post-acquisition profit. Is what we call post-acquisition profit. Post-acquisition profit, what we call the PAP. So PAP, you take the difference between this and this. So 11,500 minus 11,000, which gives me 500. So this is the post-acquisition profit that was generated by this subsidiary. Once you get this post-acquisition profit, ladies and gentlemen, you go ahead and share it out. Share it out. You've got two owners. We have the controlling owner and the non-controlling owner, two owners. So we have the parent. So in this case here, shared as follows, shared between. We have number one, the parent, who is the controlling. So is there somebody who is able to remember the parents' share? The parent share. This was given up there in the question. The parent share was given up there in the question, 60%. So 60% of this 500, which will end up giving us how much? 60% of this 500, which will end up giving us how much? 300, isn't it? 300, yes. So this will give me 300. The second owner is known as non-controlling interest. Ujamaa hafifu huyu. Non-controlling interest. So this is 40% of 500, which will end up giving us what here? Which will end up giving 200, which will end up giving 200, isn't it? Which will end up giving 200, which will end up giving 200. All right. All right. Now, after that, I would want somebody in this case here who is very, very clever, who will be able to go ahead and give me the working for NCI. It's long since I gave you guys a gift. I need to gift somebody here. I need to give somebody a gift. I need to give somebody should be able to get a gift here now. I mean, that is the easiest working ever. It is the easiest working ever. I'll never be defeated, ladies and gentlemen, in getting NCI. Anybody should be able to pick this NCI pretty fast. NCI pretty fast. All of us should be able to get this NCI pretty fast. All of us should be able to get this NCI pretty fast. Pretty fast. So, ladies and gentlemen, remember for NCI, we look at their position at the beginning. We look at their position at the beginning. We look at their position. Thank you very much, Leonida. Thank you very much. We look at their position at the beginning. Let me just share this. Plus their share of PAP. Plus their share of PAP. Plus their share of what year? Plus their share of PAP. Plus their share of PAP. So, ladies and gentlemen, what do we have here? So what do we have here? So we have in this case here NCI. If you remember NCI, these guys were somewhere. We're told here, Pedantic has a policy of accounting for any NCI interest at full fair value. At full fair value. The fair value of the non-controlling interest in Sophistic at the date of acquisition was estimated at 5,900. We're cutting the 3 zeros, 5,900. Consolidated goodwill was not impaired at that date. So you don't want anything to do with goodwill now. What I want is to know the value of NCI at the beginning, what was brought forward, and then we attach their share of PAP, and then that will be everything. So, ladies and gentlemen, this is what we have there. This is what we have there for NCI computation. For NCI computation. For NCI computation. For NCI computation. This is what we have, NCI at reporting. NCI at reporting. This one here will be NCI at acquisition, which is 5,900. And then we add NCI is a share of PAP. NCI share of PAP, which is 200. So this gives me 6,100. So please, this figure, I hope you are able to see it in your consolidated balance sheet. Go to your consolidated statement of financial position and look for non-controlling interest under equity. Under equity. I hope you are able to see it. Under equity, I hope you are able to see it. And then you put it there. Let me just share the answer for you to see where you're supposed to put it. NCI under. All right. So we have here non-controlling interest. Non-controlling interest. You can see non-controlling interest is right under equity, where we have the share premium, share capital, retained earnings. Then amongst those, you put just NCI there, 6,100. And then now we go to the last working, which is the working for what year? For retained earnings of the group. This one here, retained earnings of the group, the one that is coming to 35,700. Very easy, very easy. Retained earnings for the group. So retained earnings for the group's retained earnings. If you allow me to rub this, we have retained earnings for the group. So groups retained earnings. So groups retained earnings, what do we have here? We have retained earnings, the parents' retained earnings. The parents' retained earnings at the date of financial statements. At the date of financial statements, do we have the parents' retained earnings? Let's check. Let's check. 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 Let's check this. Let's check this out. Let's check this out. So, ladies and gentlemen, this is what we have here. So we are told here, retained earnings for the parent now, pedantic. Retained earnings at the date of financial statements, 35,400. 35,400. Remember also these guys have gotten PAP. So we have here share of parents PAP, which you guys gave me as 300. So this gives me 35,700. Fortunately, we never had any impairment loss. So 35,700. So please go and put it again under equity. Go and put it again under equity. Under equity, let me just share this answer again. Let me share this answer again for you to see where the group retained earnings is appearing. For you to see where the retained earnings is appearing in your statement. Not that one. I've opened the wrong one. Here, under equity, we have share capital, we have share premium, we have retained earnings of 35,700. Make sure that you're adding it at the right place. Make sure that you're adding it at the very right place, Thank you so much. So I think we now have everything. So please go up there and see whether your total assets, if you add your total assets, see whether your total assets are coming to 8,900. Look at your statement of financial position if you were there in our yesterday's class. If you are there in our yesterday's class, can you kindly add and give me the total assets? Please add and give me the total assets. Are you able to get that 8,900? Total assets. Pata potea. I want somebody to confirm that the total assets are 8,900. Total assets must be 8,900. Is there somebody who is able to get that figure? Really? 8,900. Is there somebody who is able to get that figure? 8,900. 8,900. Total assets. Thank you so much. Yes. Then please just go down and give me the total equity and liabilities. Just go and add all of them. The balancing, we see whether this thing is going to balance. Total equity and liabilities. Add all of them. Just add all of them. This column here, I don't even need these subtotals. No matter what I do, I add all of them. 11,600, 8,000, 35,700, 6,100. You add the loan note of 7,000. You add current liabilities of 12,500, and then you see whether you're getting 8,900. And if you happen to get 8,900, which means that our sub is balancing, then you need to clap for yourself. You're a very good student. Of course, if you have been following, don't just clap for yourself for nothing. If you have been following. All right. All right. All right. All right. All right. It is balancing. 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 But let me ask you a question. In an exam situation, would you want to balance that thing? Do you know the energy needed to balance a question, an exam situation? I'll be very sad if I get a student who tries to balance questions in an exam room. I'll be very sad. Very sad. Because I know by the time you're balancing a question like a group consultation question, then that means that 1 hour, 20 minutes, pop, gone, gone, gone. In your exams, we don't want perfection. In your exams, actually, you want a lot of imperfection. A lot of imperfection. What I would want is to see a student who is able to touch on each and every question with as many entries as possible being what you are correct, not wasting your time on being perfect with just one question. No. Masani machache. Masani machache. Masani machache. Masani machache. Never yes. All right. So this very question has got our next concept here, which is now the consolidated income statement. Hiyo ni mboga mboga. Hiyo ni mboga mboga. Hiyo ni mboga mboga. Kwa wale ambao mnakula mboga inaitwa mrenda. Hii ni mboga mboga, ni ndio rahisi kabisa hata. Hii hakuna kitu hapo. Mrenda yani iko soft kama mrenda. Ama gani? Ni mboga gani ambao pia ni soft? Mboga gani ingine ambao ni soft? Unajua watu wengi hamwezi kuwa mnajua mrenda. Mboga safi sana. Ni mboga gani ingine ambao ni soft? Yani ile mboga soft. Yenye hakuna kutafuna, ya lazy people. Very good. Ya lazy people, hakuna kutafuna na meza tu. Terere, yes. Terere, I was looking for that word, yes. Terere, yes. Terere. Seveve si ndio mrenda ambayo ni gani tena? Ama we shall overcome. No, seveve ni ingine hii hapa na seveve sio mrenda. This guy is confusing me now. Let's leave that story. Let's come here. Now, we are told here, part one of this question, they want us, ladies and gentlemen, in this case here to do what here to prepare consolidated statement of profit or loss for pedantic for the year ended 30th September 2018 or whichever. So then in this case here, what do I do? The first thing that I will do whenever you tell me to consolidate, I will come here to consolidate profit and loss. You are a good examiner. You want me to pass? Oh, yeah. I will come here and mention here pedantic group. Consolidated income statement. Income statement. Oh, yeah. So I'm consolidating now. So this is very easy. I'm simply copying everything as it is given here. I'm copying everything as it is given here. So we start with revenue. So I'll not even count the months. Mimi nakuwa mjanja. Nitakuja hapa revenue. Naandika tu vile iko. So revenue uye nachukua ya parenti 85,000 na add na ya subsidy. Hata kwanza sitaanza kwa portion. Kwa portion ni second step. Nasema plus 42,000. Kwa portion lakini usichukue calculator wewe. Plus 4. Unaandika hivyo pro forma, unajaza tu pro forma. Hiyo ni revenue. Alafu tuko na cost of sales. Cost of sales. So cost of sales, what do we have here? So for cost of sales, what I can see for the parent pedantic is 63,000, 32,000, 63,000 plus 32,000 plus 2,000. Alafu tunawacha space ya gross profit. Gross profit. Gross profit after gross profit, abracadabra, unakuwa na distribution cost. Distribution cost. Hebu nitaacha kusema majina abracadabra. Si watu wenu nyumbani wanaanza kunibaptize hiyo jina abracadabra. Wanasema mwalimu wako ule wa abracadabra ndio huyu. Wacha nikuwe serious. Let me be serious. Let me start being serious from today now. Distribution cost 2,000, 2,000. Una add to 2,000, 2,000. Sitaki nikuwe entertainment person wa watoto wenu. Distribution cost 2,000, 2,000. Unless you start paying me for that work. Administrative cost. So admin cost, what do we have? 6,000, 3,200. 6,000, 32. Una copy tu kuanza tu. Una copy tu hivyo. Hiyo ni administration cost. Kutoka hapo tuko na finance cost. So finance cost, ladies and gentlemen, I can see 300, 400. Finance cost, I can see 300 and then 400. Oh yeah. After finance cost, I'm simply copying everything down here, the way it is given. I don't change nothing. Profit before tax. So we have here profit before tax. We have here profit before, una copy to profit before tax. So profit before tax, hiyo nitapata baadaye. Tuko na tax, tuko na taxation. So taxation, ladies and gentlemen, is 4,700 and then 1,400. So we have here 47, una copy to plus 14 and do like that, plus 14 and do like that, plus 14 and do like that, plus 14 and do like that. All right. So usha copy kweli ama bado hujamaliza kucopy? Umekopi ama hujamaliza kucopy? Abracadabra. Umekopi ama hujamaliza kucopy? Abracadabra. Done. Thank you very much. Now it's after you have done that, now you have to come and recognize these figures you're seeing here for the subsidiary are a whole year. They are a whole year figures. But you see, in this question, we stayed with this subsidiary for how many months? Is there somebody who was able to count those number of months correctly? I was surprised yesterday. I met, in this case here, girls who know how to count months. They were able to count months very well. They rarely do these correct calculations. On 1st April 2018, Pedantic acquired 60% of the equity share capital of Sophistic in a share exchange of 2 shares in Pedantic for 3. You can see the date of acquisition is 1st April X8. And then the date of reporting, financial statements date, is 30th September. And they counted. So in this case, here, ladies and gentlemen, they are telling me it is 6/12. So 6 months in the year, 6 out of 12. All right. So it means that for the parent, of course, we normally take all the figures as they are. So for the parent, we normally take all the figures as they are. But you see, ladies and gentlemen, for the subsidiary, you must apportion the figures. For the subsidiary, you must always apportion the figures. You have to do time proration. So tulikana hii kitu for 6/12. So nasema hii zote, abracadabra times 6/12, times 6/12, times 6/12, times 6/12, times 6/12, times 6/12. Alafu, shetani asikukujie, weke bracket hivi, ati hivi. Hiyo ni shetani anataka kuongelesha kwa undani. Mbaya. That's very bad. Because you see, this 6/12 is supposed to affect the figures of what year? The subsidiary. It's supposed to affect the figures of the subsidiary. Haya, sasa siku moja after nimefunza vizuri hivyo, mwanafunzi akaenda akapata group imekaa na subsidiary for 3 years. Group imekaa na subsidiary for 3 years. So what that student did, akakuja akamultiply na 3, akamultiply na 3, zote akamultiply na 3, sababu ati group atasa ni figure ya 1 year, so na nataka times 3, times 3. Huyu mwanafunzi kusema ukweli ako correct kweli, times 3, times 3, times 3, ako correct kweli ukifikiria? Ako correct kweli ama ni wrong? Sasa huyo mwanafunzi ako correct ama ako wrong? Accountants talked to me this morning. Yeye ameona tumekaa na hii subsidiary for 3 years. Yeye akasema the right thing to do now is to multiply with 3, 3, 3, 3 throughout. So ako correct ama wrong? Mbona hamniongeleshi? Mbona hamniongeleshi? Ako wrong, ladies and gentlemen, because income statement is for only 1 year. Once umekaa na subsidiary for more than 1 year, then you can't do time proration. Time proration, you normally do time proration whenever the duration that you have stayed with this subsidiary is less than 12 months. Less than 12 months. Ikishafika to exactly 12 and above, 12 and above, 12 you see is 1 year and above, don't multiply these figures with anything. Ukishasikia ulikaa na kitu for 3 years, weza chukua tu calculator anza kufurahi. Of course kuna some adjustments here. So yani in short, huyu mwanafunzi ali end up kufanya in this case here what we call an ID10T error. Ali end up kufanya what we call an ID10T error. ID10T error. Out of bus, crashed, yes. Ali end up kufanya ID10T error. My teacher those days VB6 programming. Anytime I would do a mistake, alikuwa ananiambia umefanya ID10T error, umecommit ID10T error. Baadaye uja kujua after mimi nilikuwa mjinga tu. I think I was an idiot. After some time nikarealize kumbe asemi ID10T error, kumbe ni idiot. Nikasikia mbaya sana, lakini nikasema nishajua kuna error inaitwa ID10T error, hata mimi nitakuwa naitumianga nikifunza. So please don't commit that error here. If it's more than 1 year, don't bring those numbers here, multiplying those here. Don't bring time there. If it's more than 1 year, don't bring time there. Now from there, we start with the income statement adjustments. Income statement adjustment hazina maneno, hizo ni rahisi. Hizo nimekwambia hii ni mtenda. Hizo ni rahisi sana. Hizi ni rahisi sana. So kwanza tunaanza na intra-sale, internal sale. So internal sale hapa iko wapi? Internal sale hapa hii hapa. Hii. Sales from sophistic to pedantic in the post-acquisition period was what year? 8,000. 8,000. Now, ladies and gentlemen, remember, whenever these two related entities, whenever they do business, that is not a genuine sale. Not a genuine sale. That is basically a transfer of goods from this. It's like departmental transfer of goods. We transferred from this department. We will say department A, we will say department B. These are the same companies. You can see sub means part of subsidiary, part of the parent. So if you're told that the parent did business with subsidiary or subsidiary did business with the parent, that sale is internal and it must be eliminated from the sales because that sale, ladies and gentlemen, is fake. So remove fake sales, the whole of it. So you come and in this case, you say minus 8,000 and then we have here minus 8,000 like that. You remove like that, minus 8,000, minus 8,000. So any fake sale must be removed from the group sales and the group cost of sales. From the group sales and from the group cost of sales. Why group cost of sales? Because you know, one company is saying, Sophistic is saying, I sold. So Sophistic has booked this 8,000 as a sale. On the other side of the coin, we have another company called Pedantic saying, I bought, I purchased, and purchases is normally found under cost of sales. To get cost of sales, we normally take opening stock plus purchases minus closing stock. So purchases is well within cost of sales. So whenever there is a fake sale, a sale within the group, then that has to be done what here, that has to be subtracted. What if in this case here, the parent sold to an associate? What if the parent, a parent company, will bring the associate? Although I don't like those what if questions, we shall be able to reach there, but for now, just allow me to ask it. What if What if we had an associate company and the parent had sold to it? Do you think that sale is fake? Should we subtract it? Should we subtract it? Should we subtract it? First of all, the figures of sales of the associate, they are not here. Remember, ladies and gentlemen, we are looking at group. Group is basically a well-knit family, nuclear family, father, wife, husband, wife, father, daughter, father, son, like that. If you make a sale to an associate, that's a sale like to a cousin. Cousin zako wanaweza kuja biashara yako, wewe uwapatie goods for free, hata kama unawapenda sana. At any time cousin anataka sale, unampatia free. Unaweza kweli? Please talk to me. Unaweza kweli fanya biashara kama hiyo? Unaweza ukafanya biashara kama hiyo? Unapatia free? No. Utaangusha biashara. So hiyo lazima straight away utaanza kuwa charge. The same case with parent and associate. Associated companies are our cousins, distance relatives. Those ones in this case, that business will be said to be what is genuine. We can never subtract. But anything you do within the group, and remember, group is parent and subsidiaries. If you have any transaction within the group, then that transaction must always be eliminated. So, ladies and gentlemen, we know that this internal sales normally leads to UPS, and we were able to compute UPS. So the next thing is to think about UPS. So do we have UPS? Do we have UPS in this question? Do we have the amount? UPS in this question? Do we have UPS in this question? Do we have UPS in this question? UPS in this question? Oh, they had given me the figure of UPS. Oh, yeah, they have forgotten UPS. It is the same question that you're done. Was it 800 somebody? 800, yes. Remember, whenever we get UPS and realized profit, this should be deducted from the group's inventory balance sheet. From the balance sheet, inventory you deduct and added to the group's cost of sales. So when you go to the cost of sales of the group here, you say plus what here? You say plus 800. So if I were you, I would have written this thing somewhere in mother tongue. Ladies and gentlemen, that UPS deducted from balance sheet inventory. Deducted from balance sheet. Balance sheet is better than statement of financial position. Deducted from the group's balance sheet inventory and add it to group's cost of sales. Because remember here, the closing stock has been overstated. When you overstate closing stock, you understate cost of sales. I don't want to get into those explanations. Most important thing here is to know that whenever you have UPS, you shall always add it to the group cost of sales. That is the chorus I would want you guys to understand. Is there somebody who has been able to pick that thing? That chorus, that's a very important chorus to me. Is there somebody who has been able to pick that thing? That we always add to COS and then we subtract from, thank you very much, like that. Now from there, you know, hii kitu haitaki mtu mwerevu sana. Nataka tu mtu anashika hizo steps. Ukishasikia hizo steps, utajua kila kitu. Kutakapo najiuliza kuna any fair value adjustment. Do we have any fair value adjustment? In this question? Yes, we do. So if we do we have a depreciation of it? Do we have depreciation of that? Do we have depreciation of the fair value adjustment? It was 200, isn't it? And this item that was depreciated, ladies and gentlemen, is an item of plant. Plant depreciation of plant normally goes to cost of sales. So if we have depreciation there, that's a cost. Come and add it here, plus 200. From there, we ask ourselves whether we have impairment loss. In this question, no, we don't have any impairment loss. Good. From there, we ask ourselves whether these companies here were able to loan each other. And if they were able to loan each other, then there is fake interest charged. That fake interest, I would have eliminated it from where? From this finance cost. Fortunately, there were no intercompany loans. no intercompany loans. No intercompany loans. All right. So please go ahead and give me these totals, please. Go ahead and now give me these totals here. Give me all these totals. Go ahead and give me all these totals, please. A good question from Agnes there. Whenever it comes to this UPS here, UPS now here, there is nothing like downstream and upstream. No. No. So interest on loans, you know, interest on loans, if for example, there is a loan, if for example, Pedantic gave Sophistic a loan of 10 million and interest is 10%. You see that 1 million will be included where? Will be included in this finance cost. And yet we know it's a fake interest. It's fake interest. I will be able to eliminate. I'll be able to eliminate. So here there are no intercompany loans. No intercompany loans. So do they have these figures really? The cost of sales. We shall be able to get these good questions here. If there is impairment, we'll be able to get those questions there. Like where do we take it? Do we take it to administration? We shall be able to get those questions. So cost of sales, I'm being told is 72,000. How about in this case here, this revenue? Is there somebody who is able to give me this revenue very fast? I can't see revenue. I can't see revenue. 98,000 from Paul. 98,000 from Paul. So then can you kindly deduct this to give me the gross profit? Can you deduct this to give me the gross profit? Thank you, V. So gross profit is 26,000, 26,000 gross profit. So then are you able to give me, in this case here, distribution cost? Please give me distribution cost. Please give me distribution cost. Please give me distribution cost. 3,000. Please ensure you're using your calculator very well. Don't put brackets here. So like this is 2,000 times 6 over 12 is 1,000. 1,000 plus 2,000 is 3,000. Or in your calculator, you simply don't punch equals in between. You say 2,000 plus 2,000 times 6 over 12, and then you say equals at the end of the day. So in this case here, we are getting 3,000. We are getting 3,000 here. We are getting 3,000 here. Thank you so much. From there, ladies and gentlemen, we go to administrative cost. Administrative cost. Administrative cost, I'm being told, is 7,600. Administrative cost, see, this is 1,600. So plus this, 7,600, yes. So administrative cost is 7,600, 7,600. Finance cost is how much? 500. Finance cost is 500. Finance cost is 500. And then we have, in this case here, profit before tax. Are you able to subtract 26,000 minus those three things? Leonida is giving me 14,900. Leonida Matunda, 14,900. 14,900. 14,900. And then we have, in this case here, taxation. Is there somebody who is able to give me the taxation? Is there somebody who is able to give me the taxation? Taxation. 5,400. Taxation is 5,400. So you go ahead and deduct like that. Go ahead and deduct like that for you to be able to give us what we call profit after tax. Profit after tax, profit after tax, profit after tax. 9,500. Profit after tax is 9,500. Profit after tax is 9,500. Profit after tax is 9,500. Dave bwana, umepata 11,500 wapi Dave? Kwani umeongeza? Hujatumia calculator Dave? 9,500, yes. Thank you very much. At least you have seen that. And then there is a hot air working that is normally done here, that this part is attributable to what is attributable to the parent, what is attributable to NCI. That part normally never gives you any mark. That part I'll not teach it at all. All right. So if you look at the answer, which is given in this book, if you look at the answer given in this book, very nice, great things, great stuff. I like group consolidation. So in my tomorrow's class, I'll be teaching you something very nice, now called what here? Foreign subsidiaries. When you have a subsidiary abroad. When you have a subsidiary abroad. So you can see this thing here. You just finish it here for the profit of the year, 9,500. Don't in this case here go to these other semantics. No. This should be enough. Because of course, if you wish, you know what is going to the NCI. Already you have calculated this, the share of PAP, but don't go into that. That will never give you any mark. So ladies and gentlemen, remember, like now at my age, I may not be able to understand most of the music that I normally hear. Nikitumia matatu saa zingine, napenda kutumia matatu saa zingine, ni very nice with this economy. Saa zingine kwa matatu tu. Kama zingine nikienda kuona my father, anaishi Korongai. So naingia kwa matatu. So hizo mziki zenu mingi has make sense. But you see now, kuna parts za choruses lazima u understand. And not unless you have a problem. Kuna zile choruses lazima understand. Kama ile kile nasema namna hii, atuweka shida chini, alafu uweke mikono juu na ubanjuke kabisa. You see now that one I'm able to remember it. All right. So the same case with these choruses of what here? Choruses of group consolidation. There are things that you'll always be like now internal sales. That one is a chorus. Deduct. If there is UPS, what do we do? Add to cost of sales. That's a chorus. All right. If there is any depreciation on fair value adjustment, depreciation, what do? You add like that. You add like that. So those choruses, you must always remember them. You must always remember them. Even when you are sleeping, try to remember those choruses. Try to remember those choruses. Try to remember those choruses. You know, during our time, our songs used to make a lot of sense. And I normally tell you this thing, a lot of sense during our times. But some of your songs nowadays, I don't know whether it's the language, maybe you guys are using Sheng quite a lot, but there are others which make a lot of sense. Like there is one that I will never, ever forget. And I told you this. I went to some, is it Quivers or Quivers? Somebody had called me there. Akafikiria mimi ni hiyo maneno, akanipeleka huko. So nikiwa huko tunaangalia nakula nyama namna hii, mimi nasikia wimbo zinachezwa, ingine sielewi. Lakini sasa ingine kasema, hiyo ilinifunza sana. Hiyo niko na mafunzo mengi sana. Hiyo sister sawa natakuwa namwambia kila darasa, kwanza wanaume. Ati mimi niko na mali mingi kushinda ya babako. Ati na hii mali ni ya babako. Ati kasikie vibaya huko kwenu. Mimi nikaona kama kijana yangu atakuja kuambua lugha kama hiyo. Nilijifunza vitu mingi sana hapo. Hiyo kitu hiyo hatari sana. Hiyo ni song ambayo iko very, very educative. Very, if you are wise, that's a very educative song. Ukweli ama uongo. Ati mimi niko na mali mingi kushinda ya babako. Na hiyo mali ni ya babako. Kijana, kasikie vibaya huko kwenu. Kasikie vibaya huko kwenu. Hiyo nilisikiza sana. Hata nikajua more than chorus. Nikajua more than chorus. Hiyo ndio iko na Well, tomorrow is AFM. Oh, tomorrow is AFM. Yes. I'm really liking this AFR. We shall overcome. So, ladies and gentlemen, it's 6:21. Kasikie vibaya huko kwenu. Hii Luciani, mwanaume mwenye ako na akili mzuri. Hii ni wimbo iko na message mingi sana. So, ladies and gentlemen, sorry for coming again in late today, but I believe within those few minutes, we've been able to do justice to this group consolidation. So I'm looking forward to meeting you in our next AFR class. Ciao. Bye. Thank you.